remember back in March and April when the price of silver skyrocketed, demand for silver skyrocketed? Are we heading for a repeat of that situation? What caused it back then was a banking crisis, and what caused the banking crisis was rising interest rates. And primarily at that point, the culprit was bond prices going down. But are we heading towards another potential major crisis? This time with commercial real estate. We're going to talk about that today with a returning guest to Ron's Basement, Brian from Mountain Bullion Entertainment. Brian, welcome back to Ron's Basement.
Hello, Ron. Thanks for having me back on.
Well, it's great. Go ahead. It's great to have you here. You were a fan favorite last time, so thank you for joining us again.
Oh, well, thank you very much. I'm glad that everybody enjoyed me being here. It's an honor to be back in the basement, and I feel truly privileged. And folks, I do think we have some great information to share with you today in regards to commercial real estate. And we might find out if this has any implications for the broader economy and the precious metals.
Yeah. It's interesting. We haven't heard anything about the banks, really. I mean, not a lot for the last couple of months, but I heard one of these top analysts just the other day talking about how if you think the Fed isn't freaking out about banks right now, you're fooling yourself. Sure, when Jerome Powell speaks, he's not going to talk about the banks, but behind the scenes, behind closed doors, they're probably, very concerned. And, any ideas about what might be going on there, Brian?
Yeah, they're definitely keeping it quiet, and I'm sure you're right. I bet that they are very concerned. Some of these markets, I mean, they're in really dangerous waters. I had seen a report in regards to New York City. Now, New York City, when it comes to this commercial real estate, it's 40% of their total revenue that comes from commercial real estate, and about 20% of that is linked to office buildings. So, beyond just the banks, it could be some serious pain that could get inflicted to various cities who are, expecting revenue from these buildings.
Wow, I didn't really think about that, right? Yeah, some of these cities, in terms of their fiscal budgets, and a city like New York City is obviously huge, but a city like Cleveland or Atlanta or St. Louis or Denver could likely be in the same spot, facing pretty significant declines in terms of tax revenue, essentially, that would be coming into the cities.
Absolutely. And a lot of you might have noticed when you're walking around the downtowns in your various cities, a lot of these buildings have, office space for rent signs, things like all unit sizes available. I mean, they have an abundance in a lot of the downtown areas for people to pick from if they want to rent any office space.
Boy, you're tempting me, Brian. Maybe I should move out of the basement into a New York City high rise.
Yeah, have a window in the background,
Yeah,
all those, the price per
exactly.
square foot is nice and low.
Well, we know when the banks back in March and April ran into trouble, it created huge demand for the precious metals, right? I mean, the
Yes,
prices went up. You couldn't find silver, and at that point, commercial real estate was just starting to get recognized as a potential problem down the road. Do you think that, as we move into the next 6 to 18 months, that this could really start to boil, if that makes sense?
absolutely. And you're correct. When SVB failed, Silicon Valley Bank, the wait time to get silver really went up. I mean, it put a little run on the silver market there. And now, I don't know how many other banks might be in there, but we've got SVB, Pacific Western Bank, First Republic, Signature Bank. I think there was one called Heartland Bank. You had mentioned on one of your videos one time. So, a lot of these banks are taking some serious hits in regards to commercial real estate.
Right. Right. Well, and I think the thing with commercial real estate is, what we saw with those, and some people refer to those as the S banks, right? Silicon Valley, whatever the other ones that started with an S. That was almost like a run on the bank type situation, a result of bond portfolios to a certain degree. but the difference with the commercial real estate is that uh, it's more of a delayed hit. As these projects or investments or office building complexes need to be refinanced. It's that, it's coming up on kind of a rolling basis here over the next like 6 to 18 months to 24 months. And the value now, the bank's loaned out a certain amount of money, but the value of the commercial real estate has dropped. I mean, the revenue that they're generating dropped and the value of it dropped, and the interest rate that would be charged to refinance the debt on the projects has, darn near doubled in a lot of circumstances.
If you're looking to buy gold, silver, or platinum, do yourself a favor and check out Pimbex, the online precious metals bullion dealer and sponsor of Ron's Basement. I was a happy customer before they offered to support the channel. You'll find they have the best prices, quality, and service. I think Pimbex is best, and you will too. And be sure to tell them that you're from Ron's Basement.
Right, absolutely. And yeah, thank you for pointing that out in regards to the bonds. In regards to the timeframes, they're saying a third of all the leases will expire by 2026. So a lot of these mortgages were put into place when the interest rates were low, and these buildings, they're not worth as much as they owe on them if they've lost 25% of their value since they have, taken that loan out. And so they're going
Right.
to be in a really tough position, like you had mentioned, when it does come time to look at those mortgages and get them redone, or those
Yeah.
loans, I should
Yeah.
say.
Yep. And I think what on a simple, let's play make believe for a second. Let me see if I can pull this off for you and I and the viewer who's joining us. If let's make believe we're back in 2018 and I'm a fancy real estate investor. So I'm Ron, the real estate investor, and I find an office building. It's 100% leased. It costs $100 million, right?
Right.
And so I need to borrow $100 million. And so I go to you. You're Brian, the banker, because you got all the money, my friend, right? And I say, hey, Brian, I've got this great building. It's 100% leased. Look, I had it appraised. It's worth $100 million. It's bringing in 10 million a year in rent revenue. And will you loan me the $100 million? And now you've got depositors' money, right? You've got money in your bank that people from all over, your customers have deposited with you. And you look and you say, well, yeah, that looks like a very viable investment, Ron. Here's $100 million at a 4% interest rate, and it's a 5-year loan. So in September of 2023, you're going to have to refinance that. So, I get the money, I buy the building, I'm paying you 4% a year, 4 million a year. I'm bringing in 10 million a year. Life is good, right? But now, since that occurred, that building went from being 100% leased to 60% leased. So instead of now I'm only making 6 million
6
a
million.
year.
Yep.
Yeah,
Yes,
I'm only
sir.
making 6 million here. We're keeping things simple here, right? And when I go to get it appraised, the guy that appraises says, it's not really worth 100 million anymore, Ron. It's worth 70 million a
75.
year.
Sure.
Yeah, right. Yeah. So then September's rolling around here in a month, and I'm going back to you saying, hey, Brian, we need to refinance that loan. And you're looking at me and you're saying, well, wait a
What's
minute.
the cash flow on that now?
Yeah, well, it dropped a little bit, Brian. And
Oh,
yeah, you don't ask me what the value is, right? Because that's dropped as well, right? And then even if you are going to refinance that 100 million, the rate's not going to be 4%. The rate's probably going to be like 8%, right?
yeah.
Um,
Your company has a great credit with us, and yeah, we'd be
mhm.
happy to get you in for 7.95.
That's right. I get the Ron's Basement discount.
Yes, sir.
So I'm going to stop Ron, the real estate investor, and say, you know what, Brian? Why would I want to pay you 8 million a year for the loan on this building that's only bringing in 6 million? I'm going to be losing $2 million a year. You know what? On second thought, it's been great knowing you. Here you go. Here's the keys to the building. Right. So
Oh,
now,
no.
yeah.
I was really hoping we could work something out.
I bet you were. But so here's the keys to the building, which is now worth 70 or 75 million. Okay. But you've got all these depositors that are now making 4%, right? Because now the rate you've had to pay those people, all those moms and pops and people that have invested money into your bank that think that they have 100 million in your bank. But the reality is now, instead of having 100 million, you own a piece of commercial real estate that's worth 75 million, right? And is you know what I'm saying? That could be the impetus for, and that's what's happening, because a lot of those commercial real estate loans are written on like 3 to 5 year terms. They're all going to start coming due, and it could be a big problem.
Absolutely. And they estimate that 37% of these loans are with the small and mid-sized banks. And they're only
Mm-hmm.
going to be able to take so many hits like that.
Yeah, yeah. It could one deal like we just talked about could easily wipe out a small regional bank.
Absolutely. They got, 6 or 7 branches and they're doing okay, but they're not going to be able to take really big hits like this.
Yeah, no. And what's interesting, and that's what caused the problem with Silicon Valley, and is that once people catch wind of that, they want to get their money out of the bank, right? And
Bank run.
and so
Yes, sir.
and the bank says, well, we don't really have the money, but we've got we've got this office building that's worth 60% of of the original appraised value. And what's even more interesting, and I'm not, about what's going on now, and I heard this mentioned several times, is that in this day and age, information flows much more quickly, and people can take their money out of the bank instantly, right? I mean, you
Yeah.
with they on their phone. So
Yep.
it's not like bank runs where there were people lined up outside around the corner of the bank like in the 30s. Now, you and I could hang up right now, and within 5 minutes we could drain our bank accounts, right? I mean, it's that easy.
Absolutely. I mean, it could move really fast for these banks.
Yeah, yeah,
Like you said, right now, overnight, they could lose a bunch of their deposits.
yeah,
And
yeah. Go ahead.
what's scary too is it's starting to get pretty widespread across the country. It seemed like when I was first hearing about this, a lot of this was affecting cities that were further out west. Um, I mean, but they're everywhere now. The Twin Cities has a 17.4% vacancy rate. Atlanta's at 18.7%. Phoenix
Wow.
is at 18.9. Chicago's at 19.4. Denver is at 19.9. And then Austin's over 20% at 20 and a half. Houston, Dallas, and San Francisco are all up in the 25% vacancy range.
Wow.
These are
Wow.
10 big cities that are facing a serious problem in regards to this.
Yeah. So and those are real estate investors who I mean, that's their profit, right?
Right.
That
Yeah.
last 20%, they still got to pay to keep the building maintained. They still have to pay for the security. They got to pay for everything.
Taxes.
That last 10% or 20% is the profit under the previous interest rate, right? This long period of that we had in this country of 0% interest rates. But now that rates have skyrocketed, there's no, I mean, that's that likely in a lot of situations it's turned into a big loss.
Absolutely. And then, imagine trying to refinance these things now, knowing that they're 25% empty and you're going to be paying, an interest way more than you were previously. I mean,
Yeah,
mathematically, it's just not going to work out
yeah, yeah.
in a lot of
Well,
cases.
there you have it, Brian. I turned Ron's basement into a commercial real estate channel. Now we're about silver and gold, right?
Right.
and 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 I want to kind of pull it all together for the viewer here. The implication of a potential, right? We don't have crystal balls, but the implications for a potential crisis in the commercial real estate sector is banking troubles, and the banks are already struggling with the high interest rates with their bond portfolios, right? But they don't have to recognize, that's the big difference with the bonds. As long as they classify those bonds that they've lost all this money on, and a lot of times it's 20, 30% of the value at this current interest rate structure that we have, as long as they don't qualify them or keep them qualified as held to maturity, they don't have to recognize those losses. The difference with commercial real estate, and again, I'm not a commercial real estate guru or a banking guru, but I understand accounting that they may have to recognize these commercial real estate problems as they arise immediately. That they can't put them hide them on their balance sheet as held to maturity or anything like that. So it could be something that comes to a head or starts to come to a head. And again, from a silver and gold perspective, we know that last time we had, to me, it was a big crisis back in March and April. But I think in terms of how it was portrayed to the public, it was like, oh, we took care of that. It's all fine. And, don't worry about it. And it kind of got papered over and swept under the rug.
I think
But
you're right. I think people, for the most part, forgot about it a few weeks later. And you did see a lot of people, they wanted to go back to the safe haven assets, the real money, something
mhm.
with no counterparty risk, as you've mentioned in previous videos. So, silver and gold got a bump. That's where they're going to move to for safety in these situations.
Yeah, right. Like this 10-ounce bar here, right? This this is real money. Whoever holds it owns it. This is actually not mine. This belongs to Pimbex, my channel sponsor. But nonetheless, whoever does hold this when I give it away next Sunday, this is not invested in commercial real estate.
Right.
I
And that's a
mean,
beautiful 10-ounce bar.
thank you. But I think that's key to remember. If you have $10,000 at your local bank, you may unwittingly be invested in commercial real estate. They aren't going to tell you that when you walk in the door. They're going to say, "Hey, how you doing, Mr. Smith? Great to see you." They're not going to have a sign up that says, "We just want to let you know that we're having some troubles with our commercial real estate portfolio." No, it's the last thing
Right.
they're going to say.
Yeah, no
But
way.
you may be a commercial real estate investor.
Yeah, and it's, a serious problem. They're saying that there's 2.9 trillion in commercial real estate debt, and these
Yeah,
small, medium-sized banks are holding 1.9 trillion of that.
yeah, that's
And heck yeah, they're
huge.
not going to want to bring that up because some of these banks are really heavy on this too.
Yeah, it's
Yeah, they're
huge.
not going to ask if you looked at the First State Bank building on the way in and noticed that half the lights were off in that building. And, oh, and we got the loan on that one.
Right, exactly. That's where your money's invested, Mr.
Right.
Mr. Bank. People put their money in the bank because they think it's safe, right? But they may unwittingly be commercial real estate investors. I appreciate you bringing up that point about counterparty risk. I think that can't be emphasized enough.
Yeah, when you're holding your own metals, you don't have to worry about something like the bank crashing.
Mm-hmm.
And there's a huge advantage to that.
Yep,
I mean,
yep.
in situations where there's bank runs and inflation starts to get really heavy, it's something that's going to ride that inflation well as well.
Right. And I don't think either of us are, we don't know how this will all play out, but we can, we can read the tea leaves, I guess you can say, or try to put the clues together, pull our head out of the sand and be aware of what's going on. And yeah, you can't beat and for me, just my opinion, the safety and security that somebody gets from silver. Those are some nice looking silver bars on your screen there, by the way, Brian.
Oh, thank you very much. Yeah, if you guys want to get a 10-ounce version of one of these Britannias, make sure that you get signed up for Ron's giveaway.
Yep.
This is mostly all British stuff that I have out here today.
Oh, excellent. Yeah, I have this 10-ounce bar, Britannia. It is beautiful. And yeah, this video will come out right toward the end of August. And on Sunday, September 3rd, I'm going to be giving that away. There will be a link in the description of this video where you can go to the giveaway video, and all you have to do is leave a comment saying thanks Pembex, and then you'll be registered for the giveaway. Brian, thank you so much. It's been great talking to you. You've got a good firm grasp on what's going on with this commercial real estate thing, and it can have a big impact on the silver and gold price. So on behalf of myself and all the viewers, thank you for your time and your information.
You bet. Well, thank you very much for having me on. I really appreciate it. And I do hope you have a great night.
Yeah, well, we'll look forward to talking to you again, okay?
Okay, sounds good.
All right, thanks, Brian.
All right, thanks a lot, Ron. Have a good one.